So, what have we got ourselves in for today? A little later than usual here in Australia. This month it's on 11:30 p.m. and next month it's on 12:30. So daylight savings does affect the time in APAC when you are trading. Not too bad. I mean, 11:30 is not too bad. 12:30 is starting to get there on a Friday. Depending on how big your week is potentially a particularly uneventful event if it begins to lack the volatility that previous months has. Now, is this month going to be a low volatility non-farms? I suspect this month could be very interesting. Right now, the dynamics of this month are very different to almost any other NFP that we've had in this string. We're coming into this NFP with extreme US dollar strength, short-term positioning, and at the same time you have an announcement that is expected to be extremely weak because of the hurricanes. Alright, so the forecast 80,000, and it could be anything, right? With the three large hurricanes hitting all in 1 month. The potential for, you know, an absurd number or out of place number is very real. Now, the obvious threat here is a really negative number. The ADP does sort of tame that down a little bit, and if anything, you know, maybe the bar's set too low. All right, now if the bar's set too low, then that's a strong number comes out. You've got a lot of pairs at the moment at key levels. So gold is pushing lower and is starting to, hasn't capitulated though, right? Gold hasn't capitulated. It's getting there. It's getting to that point where it might soon, because people who have been buying, you know, at 1300 and below must be feeling the pressure here. Aussie dollar is at the, you know, the biggest level of the year, which is the breakout side level from the 2016 rejection zone, and it broke up earlier, and now it's come back and tested for the first time. This is driven by weak retail sales yesterday. One of the RBA members talking about rate cuts. Not, you know, not just not the RBA not raising rates, talking about rate cuts. Now that will get your market selling up here, even no matter how far we've come. And you know, that's a pretty negative story, and that's led to AED underperformance across the board today. But you know, we're still here. You got to respect this level. It's huge. If the US dollar rally stabilizes and settles down, and we get reversals next week, led by, say, the euro, headlined by, say, ECB or just a pushback, right? I mean, pushback can come quickly. It can come from concerns about tax reform in America, concerns about you know, who the new Fed chair is going to be. It is also a negative US dollar event until we get the actual person, the person who is going to be the next Fed chair, assuming that Yellen's not going to be the next Fed chair. It is potentially going to be the biggest story this month. All right, so this has changed in the last 48 hours since I've talked to you guys. You know, that story, don't underestimate how important that is. If Walsh gets in, he's going to potentially cause a huge US dollar rally. Whereas the others and Yellen are probably more open to US dollar selling in the short term. And the other big story, obviously, is the October ECB meeting, which should become a theme later in the month. So that's the backdrop, right? Notable this week, huge US dollar data. You know, like so many PMIs crushing across the board, stocks hitting fresh all-time highs, and dollar yen is here. Yeah, dollar yen is here. Like, what? If you told me the things that had happened this week, if you told me that Dow would be at 22,800 and that Euro would be below 117, Pound below 130.70, Aussie at 77.50, US PMIs at 60, and that dollar yen was still at 112.95, I'd say, wow, what's happened? You know, well, like literally that correlation is out of whack completely. something is really holding back the dollar yen. The only good argument I can understand here is that pound yen and euro yen selling have been too much, and that's led to just dollar yen underperformance. And that's a real thing, right? When the pound yen underperforms, it is generally at the same period that dollar yen's underperforming. Usually, if you want big moves in the dollar yen, you want every yen cross on board, and nearly every other yen cross at the moment's pulling back. So that would probably be the main reason why you had underperformance. There hasn't really been too many headlines out of Japan that have caused concern. You know, if anything, the Japan story is still negative for yen. Abe is likely to win. Polls suggest that is the case still. So, you know, dollar yen is underperformed considerably, and if it's a strong enough number and we get dollar yen above 113.30, that's probably the cleanest trade today, which is dollar yen to 114, 114.50, and probably the way you'd want to play it if the number's decent. You don't want to get involved too quickly with, you know, selling the euro underneath 117 sounds crazy dangerous to me, given the backdrop here. But selling the Aussie and selling the pound, those two have negative stories. You probably don't want to sell the Kiwi at these levels. The reason for the Kiwi is that over the weekend you're going to get probably a lot of news regarding the election winner, and then probably some sort of positioning from that other party who's supposed to, the Kingmaker Party, National New Zealand First, supposed to be forming a party by Thursday next week. But you know, politics, you're probably going to have a result earlier than that. So selling the euro underneath 117 in the backdrop of the ECB is probably dangerous, given that 116.20 is the big level, 2016 major breakout sort of level, and selling the Kiwi into that news is dangerous. But the stories behind the Aussie and the pound seem to have a bit more room. What's going on with the pound? May gave a speech that was terrible, and everyone's been calling for her to resign, and that's been going on for 48 hours now. So market's caught a little long, and the pullback here could easily continue. Sentiments change pretty negative onto the pound very quickly, and that's pretty hard to stop. That sort of right. You've seen Brexit stories. That's political uncertainty combined with Brexit uncertainty. That's a pretty toxic mix. But at some point as well, there's value in the pound, given that the Bank of England is likely to raise rates in November. So where's the danger come in? The danger comes in that the Bank of England does not raise rates because of political uncertainty, right? Lack of stability. So you get the double effect, which is very similar to what happens when stock market falls. You know, the chances of the Fed raising go down generally when stocks fall, which leads to even more US dollar selling, which leads to more even dollar yen selling, which would have been down on stock market selling. So you haven't got stock market selling for a while to show that effect, not to the point that you get changes in expectations on the Fed anyway, but it happens at around about 5% down to 10% down, and that reinforces a second wave of dollar yen selling sometimes. You get that with, you're getting that right now with the pound. Political and turmoil creating uncertainty around the rate hikes of the Bank of England. That seems pretty toxic sort of mix. So the pound probably is more fragile and more negative than the euro, and the Aussie is more fragile and negative than the New Zealand dollar. Obviously dollar CAD's in there as well, and dollar Swiss, but they're probably not what we want to focus on just yet. But dollar Swiss maybe. Dollar Swiss is much better buy than Euro Swiss is a sell at the moment. So that's one way of playing it. Yeah, they're not gonna kick her out just yet, looks like. But I think it's pretty close, right? One more fumble and maybe she'll resign herself. But who's going to take over? Not the Boris Johnson, right? I mean, and she's pretty hard Brexit, isn't she? So is her resigning a bad thing for the pound? Maybe not. Maybe not. Sell while there's uncertainty. Maybe sell the headline if she does resign. But then after that, maybe things are looking better. You know, could end up being a little bit of a positive event. On Wednesday, when we started to sell the stock market, that was way too early. Got into that game a little early as well, so that was the sell here, thinking that we might have a pullback any time into the Fed, into the NFP. We've had a continued blow off on the top. Yeah, remind me not to try and sell stocks again. That is a mugs game. That's a little dangerous. So selling stocks has proven, you know, I thought I was being patient, waiting 14 days into a rally. But now it's day 16, so I think you just have to wait for price action to sell stocks. I mean, that's the key, right? You need to see some selling first. You need to see some key reversals, a nice little, I don't know, pin bar. You know, just something huge, something like a massive 200 or 300 point drop in a day, with little news or a story which has legs and the market reacting to it. We're getting a lot of stories, you know, and you know, North Korea, disappointment with Trump, yada yada, but you're not getting follow through selling at all in the last 3 or 4 months. So that's where the issue is. So the price action hasn't really suggested that we sell stocks at all. So it's probably not going to be a North Korea headline that's going to do the stock market. It might be something like tax plan fails, and or a new aggressive Fed chief. Like if Wash gets tapped and the market doesn't like it, that's a story which has legs. Okay. So let's have a little look at the numbers here for Prime Minister may make a statement. Yeah, okay. A lot of traders have been told that if you've read bank reports, a lot of bank reports are saying don't focus on the headline number because it's going to be all over the shop. What you want to be focusing on today is the average hourly earnings, which is what the Fed's watching, which is wage growth and wage inflation. So the wage inflation number is coming out. The other reason we don't play dollar CAD is there's a lot of CAD data today, and interpreting two sets of data at once while trying to watch the reaction on big pairs is hard to do. The main trade I'm going to be doing, if there's a decent number, is long euro yen as well, but I'll get to that shortly. Got 4 minutes, 5 minutes, guys. So the average hourly earnings is expecting a large tick up. There's danger in that, and disappointment in that. So it's expected at 0.3%. If it comes in lower, and it hasn't really been one to be over the top, that's for sure. It's missed 2 times in the last 5 months. If it comes in lower, then that's a bigger headline, I think, than if the non-farm payrolls number is a little weak. So missing the average hourly earnings, I think, is dangerous here. In terms of pairs to be watching, on a decent number and decent average earnings, dollar yen and euro yen probably going to be well supported. Okay, euro yen I think stabilized enough to have a little bit look at the top side again. Didn't really get down to 131.50, but yeah, and dollar yen, if it can break some of those that bit resistance that we're getting at the moment, then we can get a bit more aggressive on it. If it's weak and weak, so weak headline and weak hourly earnings, then straight buying the euro is my trade, and I'll be holding that into next week. I suspect that would be a nice trade, risk reward wise, but we'll do that trade after the number comes out. What do you got for us, J Money? Is that your euro chart, or is that your dollar yen chart? I mean, if you're looking for a long-term trade, buying the euro here on this dip seems like a great risk reward. Yeah, I mean, the story behind the euro rising later this year, as yields start to go up in Eurozone, which is very hard to stop. The central bank's been very dovish trying to stop it. does suggest that we'll go range trading at the very least, top side, more likely than not. What have we got here? Wage data, not the payroll, should be the focus. Given the effects of hurricanes, great attention on wages should also be a longer term trend. Yeah, you're starting to get that. The reason that the RBA said they may, the RBA guy said they may cut today in Australia, is talking about low wage inflation being the concern. So wage inflation is picking up as the #1 concern around the world. You're not getting, you know, the type of inflation that you want, which is wage inflation. Sometimes you're getting inflation from a weak currency, like you do in the UK, or or inflation from oil, but you're not getting inflation that's sustainable, and that's wage inflation is the main one they want. Japan, you know, the central bank and government try to basically support companies raising wages. And the reason why it's important, the bond market switches attention. The bond market is king at the moment. Talking about the 5-year yields here. Alright, so yeah, that makes sense, right? It makes sense. If the bond market's watching and the bond market changes and interest rate expectations happen off the wages data, you know, at the average earnings, then that's what we should watch. 2 minutes, guys. So a strong number, strong earnings, looking to buy euro yen. Buy euro yen. A weak number, looking to buy the euro. But we will be paying special attention to how our friend the dollar yen goes these days. That pair in particular is coiled up here and is acting a little funny. Acting a little funny indeed. So the euro, though, top side is definitely on the cards. Let's see the number out in 20 seconds now. Decent number, decent number. I'm gonna buy a little euro again. Average employment. Give me the average earnings. Don't give me all these headline numbers, please. Wow. Wow. What a reaction from the market. It's just basically going berserk here. The headline's negative, but they're running with, is that a real? Is that real? Okay, just double checking it. Huge beat there. That's a big story. That's okay, huge wage inflation number. I did not see that coming. Yeah, don't be trading off the headline. That's that wage inflation number is real. That's 0.5%. That's the biggest wage inflation number I've seen in memory here. Wow. That's going to be positive, guys, for the US dollar. I suspect that will be enough. The headline's going to be just shaken off. You won't get really too much there from that, but the dollar yen should hold. Dollar yen can't break, Jesus. All right, that's disappointing price action here from the dollar yen. But yeah, keep in mind that number is a big number for the US dollar there. That 0.5 is what everyone, you know, sort of the bigger players are watching. That should support. Let's buy a little dollar yen just to see if we can't get above 120. 13.20 and break higher, because that could be worth 80 points. and you know, if we do have to cut, we have to cut. So don't be sort of tricked too much by that headline number. That headline number will be not the one the market will watch. See the 10 years here, what we're doing in the US yields. Wow, big moves here in the US yields. Sorry, my computer is not handling this stream and 50 different tabs open. But yeah, that number you know is high. So straight buying Euro Yen and pound, Dollar Yen makes sense to me here. Hope you guys are involved in the same sort of trade. See, there is value in watching streams like this, right? Because that headline number has been the main number everyone watches. And you might have looked to sell the US dollar on that, or think there's a whip going on. Maybe, but the proof is in the reaction in the yields, and the yields are all berserk here. So that's why you should be looking at US dollar sustaining a rally. Keep an eye on this stock market though. If the stock market turns bearish on this, then you do want to get out of your dollar yen longs or dollar Swiss longs. Maybe not your pound longs or your Aussie shorts, but you know, definitely your short euros. Lack of volatility is evident though. We've had a relatively shocking sort of set of numbers, and you didn't even get the US dollar bursting first to the downside, then the big whip, which would have been what I would have expected. If you told me those numbers, minus 30,000 and then a 0.3 inflation, then I would have suggested that we get let me step to the side here for a second. I'll step into the side just to see if we do get a reversal. You know, the NFP generally has a fair bit of whipping in, and we're not getting volatility, and that does open the door for a little shenanigans just short term. I suspect though we will end higher today with the dollar yen, but I'm just stepping to the side for a second. The whip is not so much you know, an indication that, you know, the market is not going higher. It's just more you might take stops out both sides first. So the first hour of trading after NFP can be a little tricky. So I'm pretty quick on the trigger when it comes to the pushback. So what we're watching now is to see what happens here, say with the euro and dollar yen. Forget the others. Euro and dollar yen, if the euro can get above 117.20, maybe you sell here. If you're a seller of the euro, dollar yen, if it gets down to 112.80, maybe buy about here. If it stabilizes and starts to punch lower, then we can get back into the dollar yen. It's just you give up a little bit of pips, but you get more information. The trade we're in is long euro yen, long dollar yen, and that's I think going to be okay. the reason why we're long Euro Yen is because of next week, not this week, right? We're looking for the Euro ECB trade. But you have to be pretty happy with this that number there if you're looking for the Euro Yen and Dollar Yen trades. I suspect though that sort of number there will probably drive US yields higher, and European yields might track that, and that's the biggest sort of driver of the yen crosses lately. The yen, remember, the yen yields remain low, and because the Bank of Japan targets them, whereas the US and the European yields are both steadily going higher. That's where you get that big 500 point, 1,000 point rallies in Euro Yen and Dollar Yen, and that's potential for something later this year with the Fed raising rates and Q taping. So just keep an eye on the price action here. You don't really want to sell Euro more. You probably want to buy Dollar Yen, oversell Dollar Euro if it does have a whip here. Looks like there's potential for the whip now. Think about the short-term positioning here for the US dollar is a bit stretched short-term, so it doesn't really change the outlook too much. 1 day's price action on a whip, but it does put the market on notice that the even with what you would say was very positive data for the US is not leading to too strong a gain just yet. If we don't finish higher on the Dollar Yen, we'll revisit next week and ask ourselves the question, because that'll be very odd if Dollar Yen doesn't finish higher today. You can see Euro Yen squeezing here, so I'm not too worried about the Euro Yen trade. Careful when you short euros, guys. Jay and Guy, I think he's scalping it there, right? It's definitely not the preferred way to play US dollar strength. In terms of who we have coming up, I'm just checking if we do have, in 20 minutes we do have Andrew coming up, so you get a technical opinion here on what's happening in the market, and you know that his style is going to be continuation trading, so there's no reason not to be continuing for many pairs here for the US dollar strength. Perhaps though the entries are a little low, right? That's the main concern you have. In 50 minutes you do get the open of the stock market. And remember, like the US dollar, the stock market's been one way all week. If you do get selling in the stock market because of the impact on the yields and the chances of more Fed rate hikes earlier than expected, which is a real potential outcome from today's meeting, that can hurt Dollar Yen's rally ability, given that stocks haven't fallen for a while. And generally when stocks fall, Dollar Yen goes down. So do keep an eye on the US stock open in 50 minutes. That does have importance on how the Dollar Yen rally develops and matures. Euro Yen substantially higher, and we're buying Dollar Yen and Euro Yen while stocks remain supported. Is the trade, aka amazing. All right, boys. Best of luck tonight, and we'll be in on Monday to review the carnage that is probably going to continue here for the US dollar bears. Keep an eye on a few things though, but it looks pretty clean here that US dollar's got the door open for this second leg of strength. So we're going to continue with that theme until Perhaps the new ECB theme will take over next week, but until it does, you don't really want to call US dollar rally over. But do be nimble and trade safe. When I say significantly higher, I mean 135-ish, 136. Talking dollar yen staying well supported, but the euro is starting to rally again is the way you get to 135, 136. So yeah, we'll see how that develops in coming weeks. All right, trade safe, guys.